The gap between the value of the Zimbabwean dollar on the formal market and the parallel market continues to widen, pushing the prices of commodities up, with some retailers now charging exclusively in US dollars to hedge against inflation. Ibn Mabunda gives us more in the following report.
In 2023, the Zimbabwe dollar has depreciated about 35% on the formal market of the Reserve Bank of Zimbabwe against, of course, the movement of the United States dollar. On the parallel market, the same unit has shared about 70% of its value against the major currencies of the world. This, as the Zimbabwe dollar is trading at premiums of up to 100% on the parallel market. This has created distortions in the market, leaving consumers, most of whom earn in the local currency, to feel the pinch.
Ndatambira RTGS ndoenda pa break market rendo dachi US
asi chiri kunyanya kurwadza pa rate ndepekuti inenge ichikwira dollar US racho rinenge richikwira futi like izvozvi chingwa chakuita $50 ma US asi ma bond.
According to the Reserve Bank of Zimbabwe, the US dollar now accounts for over 60% of total deposits in the system and an estimated 75% of the value of commercial transactions. Owing to the volatility of the local currency, business operators now prefer payment in foreign currency. When they charge in Zimbabwean dollars, they tend to overcharge their clients.
And it RTGS yacho chasika black market rolls on the 2.2 rates. Saka stombo shanda kana ka 1. Astomboshanda, so at least that the government ikadai kwanisa by all means anditi kuti kunge chi dollarizer
zvinhu zviri kukwira tototi zvoni ma supermarket acho namahombe autokwidza ukaenda notenga mari yawo bondi rawo ritori pamusoro pedollar ukaenda wakutodawo madhora acho nekuti vanotokwidza mabondi kuti tishandise ma-US isu tisina ma-US.
Retailers say their procurement costs are denominated in US dollars, making it difficult for them to price in the local currency.
Most of the value chain players are exclusively charging in US dollars. And it's difficult for a retailer or a wholesaler to then charge goods that you procure exclusively in US dollars in the local currency. Because number one, you've got to also, you are mandated to apply the legislated exchange rate.
But according to the Consumer Protection Commission, the practice is illegal and investigations are underway to bring perpetrators to account. Meanwhile, expert voices are calling for a tight fiscal policy.
To try and salvage the currency situation in Zimbabwe, the government should avoid printing the Zimbabwean dollar in large quantities. At a time when we were expecting it to stabilize due to the onset of the 2023 tobacco marketing season, excess liquidity has never benefited an economy. How come they are not learning from the Gono era?
Going forward in terms of like even issues to do with fiscal discipline, I think you need to be very strict if you are going forward. Because a tight monetary policy regime must then be complemented by an equally tight fiscal policy regime.
The Minister of Finance, Professor Mthuli Ncube, who has oversight of the central bank, has threatened to hike interest rates.
With the recent hike in the exchange rate in other markets, should I increase interest rates? Please stop pushing up that parallel market. If you do, I will increase interest rate back to 200% and beyond.
For now, currency instability remains a concern for business as well as citizens. Ibn Mabunda from Harare for ZTN Prime.
We're now joined by Zikomborero Spanda to discuss the matter further. Good evening, Zikomborero. What's your assessment of the movement of the Zimbabwe dollar?
Okay, thank you. When it comes to the auction system, I think we can see very well since the migration to the interbank, willing buyer, willing seller interbank market, the trades, the weekly trades have been actually going down. And also, if you look around the issue around the disparity in exchange rate between formal and alternative rates, it's highly actually emanating from excessive government spending as we are heading towards the 2023 general elections. You know, the spending pressure is generally high during an election year. So I think that is the major driver of inflation as well as exchange rate.
Jacob, what do you think is the remedy to this situation?
As for the solution, you can see that, yes, we can talk about, let's have government discipline. We can talk about all sorts of solutions, but I think right now we know that elections are here to stay, and it's actually a constitutional obligation which must go on. So I think to minimize, it is going to be a mammoth task for a government facing re-election to actually lower its spending, and that's its general view. So I think what we really need to do right now is to actually embrace dollarization, but we should not do it for a long term as we prepare for de-dollarization roadmap. I think that's the only way we can now sustain durable stability in the short to medium term.
Okay, Zico, before I let you go, some market voices are calling for the floating of the exchange rate. What's your take on this?
Yes, they are coming from that just operation of market forces of demand and supply, that if you fully liberalize the exchange rate, it is the forces of demand and supply that will determine the exchange rate. But is it actually going to be a feasible option for the central bank? We know that the central bank is not operationally independent. There's political interference. That's why most economists, including myself, we are calling for actually increased central bank independence. I think once we have a more target and operational independent central bank, I think that's when we can now talk of our ability to manage exchange rate.
Thank you so much. That was Jukumborero Spanda, an economic analyst, giving us some insights on the widening gap that seems to exist between the parallel market rate and interbank rate of the US dollar trading across the country.